Ever wondered what Adobe is really worth? Not what the market says, but what the numbers actually reveal. Today we're using DCF analysis to find Adobe's true intrinsic value. Let's uncover the answer. Here's the business behind the stock. Adobe operates as a diversified software company worldwide. It operates through three segments: digital media, digital experience, and publishing and advertising. Adobe is a technology company with a $148 billion market cap. Let's see if the market is pricing this business correctly. Alright, here are the numbers. Adobe is trading at $353.52, but our DCF calculation puts the fair value at $539.60. That's a 52.6% spread, so let's see what's driving this difference. Here's how we're modeling the growth. We're using a weighted regression of historical and Wall Street analyst consensus estimates, which incorporates forward-looking growth expectations from professional researchers. We're assuming 13.8% growth initially for 5 years, then tapering down to 4% over 10 years total. We're also projecting an EBITDA margin of 39.7% based on historical operating efficiency. Our WACC calculation starts with Professor Damodaran's industry unlevered beta, which we re-lever to match the company's capital structure. This gives us a cost of equity of 8.8%. The after-tax cost of debt is 2.9%. Together, these result in a WACC of 8.7%, which we use as the discount rate in our DCF valuation. Let's examine the cash flow progression. We project 13.8% growth for 5 years, then taper over 5 years to 4% terminal growth. Each phase reflects different stages of the company's development. Now for the final valuation breakdown. We have an enterprise value of $241.3 billion, with 68.4% coming from the terminal value. After adjusting for minus $1.6 billion in net debt, we arrive at an equity value of $242.8 billion, or $539.60 per share. This uses 4% terminal growth and 8.7% WACC. Here's where it gets interesting: sensitivity analysis. Our $539.60 valuation depends heavily on the 13.8% growth rate and 8.7% discount rate. What if these assumptions were wrong? Visit Stockoscope.com to test different scenarios and see how the valuation changes. This concludes our DCF analysis of Adobe. Want to apply these techniques to other stocks? Stockoscope.com offers professional-grade DCF modeling for all S&P 500 companies. You can adjust growth rates, terminal values, and discount rates to see how they impact valuations. Subscribe for daily analyses and like if this deep dive was valuable.